The Netflix-Warner Brothers deal is a structural M&A play, not just the content. Netflix's proposed acquisition of Warner Brothers Discovery Studio and streaming assets is less about adding titles and more about reshaping market structure. Now remember, this deal was accepted at around $83 billion, which includes $10 billion in assumed debt, which is far less than Paramount's rejected $108 billion offer. More on that in a minute. This would be Netflix's largest transaction to date and a defining test of scale-driven strategy in media. Deal structure matters here. Before closing, Warner Brothers would split into two businesses. On the one hand, Netflix would acquire Warner Brothers Studios and HBO Max, along with one of the deepest content libraries in the industry. DC, Harry Potter, HBO franchises, just to name a few. On the other hand, the legacy cable assets, CNN, TNT, Discovery, will be spun into a separate public company, leaving existing Warner Brothers shareholders with that entity. From an M&A standpoint, this is a classic asset carve-out with a spin-off, designed to isolate growth assets from structurally challenged and to make the regulatory story cleaner, of course. The real issues here aren't creative, but they're regulatory and competitive. Netflix already dominates global streaming, as you can see by the numbers. Combining its platform with HBO Max meaningfully raises questions around market power, pricing leverage, and control over premium content. The early antitrust noise, including private litigation, isn't surprising. A regulatory review will likely focus on a couple of things: whether the combined platform becomes effectively must-have, pricing power and bundling effect, and the downstream impact on creators, distributors, and competitors. Overall, this deal reflects where M&A is heading in mature industries. Fewer transactions, but larger, more structural ones, with execution risk shifting from financing to regulation, integration, and long-term competitive effects. For boards and deal teams, this is a reminder that in today's environment, structure and regulatory strategy are just as important as valuation. Hence, the extra $25 billion Paramount pledged didn't get them over the line, even with Daddy's approval. That's not a dig at Larry, it's just the truth.
Licensed attorneys in New York and Texas. This video is for informational purposes and is not legal advice. Visit ratesalaw.com for more information on our corporate, M&A and securities law services.